Kam Brar for Kam's Mortgage Minute on Friday, February 15th. Well, it's post-Valentine's Day, and I'm sure most of you spent here or there a moment or two calling your significant other on a cell phone. And as it turns out, in Canada, we have, in the developed world, we have the highest cell phone bills on average. That's right, Canadians by far pay more than most. The average Canadian cell phone bill ranks in around the mid $55 range, while a country like India has around $5 per person as basically revenue in US dollars per month. So the bottom line is why are cell phone bills so expensive in Canada? Well, according to a lot of people, they point at the fact that there's very few companies, there's very little competition, and basically the major players that run this business, according to the people that are out there, feel that these guys are colluding. They're working together to keep prices fairly high, and there's really no great deals out there. So because of all of this, the CRTC, the Canadian Radio, Television and Telecommunications Commission, wants to implement a new program, and they basically, in a nutshell, want to cap bills at $50. So what they're saying is when a cell phone provider's bill exceeds $50 for a consumer, that time services should be discontinued or changed or whatever until the cell phone consumer is notified and he knows what's going on. Now, in practical terms, I guess it makes some sense, because you know what, if all of a sudden you wake up one morning, open the envelope, and there's a $300 bill staring you in the face, it's pretty much of a payment shock. It's a pretty major aggravation. However, the challenge with this is when you're dealing with professionals like mortgage brokers, lawyers, whoever, people who rely on cell phones a lot for usage, we'd be pretty much calling all the time to be talking to somebody about, hey, we know our bills at that, just keep on going. And considering the service that you get with most of these cell phone providers now with sitting on hold forever, this would only get extended and go beyond. So, I mean, what looks like a great idea with what the CRTC is wanting to do, and they called up Rogers and TELUS and asked them to comment on what they wanted to do, and trust me, neither one of those companies said, hey, I think it's a fantastic idea, and they're basically going to be protecting their territory and turf. Now, it's a great idea in theory, but again, as I told you, that's the flaw with it. I think what we should be seeing is we should be seeing our government agencies more focused on figuring out how we can increase competition. Because let's face it, the more competition, the more competitors that can come into this wireless market, chances are the price will be driven down. In most of these other countries, there is a fair amount of competition. It's not dominated by 1, 2, or 3 players. It is pretty much open field for everyone. So, what can you do? Well, keep an eye on your cell phone bills. I mean, watch what you're getting charged for, make sure they're up to date. I know from past experience, we've been charged for things that we didn't subscribe for, or ongoing charges from the past, or whatever else. I've had different things that we've discovered, so try to pay some attention. And if you can, shop around. I mean, again, there's not, most of the cell phone providers are pretty similar, but if you can find a deal out there, take it. And in the meantime, write the CRTC. I mean, basically, put your money where your mouth is and say to them, look, we want more competition, open it up. There's going to be, you know, the main players are going to argue about it, fight on it, or whatever, but come on, there's got to be room, and there's no reason why, as a country, as consumers, we're paying basically the highest rates in the entire world. Anyway, it's been Kam for Kam's Mortgage Minute. I hope you enjoy the rest of your day and your weekend, and I will look forward to talking to you on Monday.